Offsets are an important tool. They're not the only tool, but they're an important tool in deploying capital into the market, into the global south. They also provide a cost-effective way for companies to address emissions that they otherwise wouldn't be able to address.
Welcome to the Carbonsations podcast, where we speak to some of the leading figures in the emerging carbon industry. Today, we're joined by John Melby, CEO of Xpansiv, the leading market infrastructure platform for ESG commodities. John, thank you very much for joining us on the show. It's a great pleasure to have you, and I'm really excited to speak to you about what Xpansiv is all about. But before that, I would really also like to know more about yourself and what it is you used to do before getting into carbon and other environmental commodities.
Great. Violet, thank you very much for having me on. Very much looking forward to talking to you today. By way of background, I've spent my entire career in energy and environmental markets, first working on the policy side in Washington, D.C. during the time when energy was being deregulated here in the U.S. And then I moved out to the first markets, which were out in the western part of the U.S. in California, having worked on the exchange side there, and then moved to a company in Silicon Valley that was more on the data and power markets scheduling. And we moved into there to renewable energy as well as carbon markets. So I've been in renewables and carbon since the early 2000s, having then worked with a couple of derivatives exchanges around the world, working in both compliance and voluntary markets.
Excellent, John. Now, moving on to Xpansiv, I know you've been with the company for some time now. I'd like to ask you if you could tell us how it came about and how you ended up in the company as well.
Sure. So Xpansiv started really, I'd say, there's Xpansiv 1.0, which was a data company set up in Silicon Valley in 2016. And then also CBL Markets, which is a spot exchange that was set up about 10 years ago in Australia. And I ended up on the board of both those companies that I joined almost exactly the same time in 2016. We brought those companies together in August of 2019 to create what I'll call Xpansiv 2.0, or the company that we're at now. I came back in an operating role at that time, having been on both the boards. I came in as Chief Operating Officer and President. Now I serve as the CEO of Xpansiv.
Excellent. So with that said, I'm also keen on understanding where Xpansiv is currently. I know the company has 4 commodity markets, which are carbon offsets, e-fuels, renewable energy certificates, and water. How do all of these fit inside Xpansiv's business model? And do they in any way interconnect? Are they completely separate from one another?
Yeah. Well, maybe I should have added a little bit about Xpansiv here. Really, we were set up with a vision that markets could provide positive outcomes, and really, the mission of the company then is to provide the market infrastructure that supports the energy transition globally. So we worked very hard to build that out. And for us, what that means, there's no steel in the ground. We're entirely electronic market infrastructure, but we provide the underlying market infrastructure for much of the energy transition commodities. So it starts with us at the registry systems. We operate the largest registry systems in the world. Those registries support renewables, they support carbon, they support fuels and plastics, and additional programs we expect to see come online. So that's the foundational level. And then we have what we call Xpansiv Connect, which hopefully we'll get into a little bit. And Xpansiv Connect is a platform that supports those market participants connecting into the various registries that are out there, not just the ones that we operate, but those all the other registries that are out there. So we support those systems, and then we operate an exchange, and that exchange is a spot exchange that supports a number of different products. And as you mentioned, the products for us are across the energy transition, but it's really renewables. So we operate the largest exchange for carbon offsets and renewables, spot exchange in the world for those. We also operate the largest registry infrastructure for carbon and renewables. And additionally, we support water markets and fuels markets. So how do they all come together? Well, really the fundamental belief in setting up Xpansiv is that we're going to move to more and more resources that are that are being tracked, and people will care about how a megawatt of power is produced, or a MMBTU of fuel is produced, or a bushel of corn for that matter. And that to do that, you need to track attributes. So that's why we sought out to build out the registry infrastructure and acquire other pieces of it. And then to put together on top of that an exchange that supports trading that trades those attributes. So the physical delivery of an attribute, what I mean by attribute is, for instance, the fact that a megawatt of power was produced by a wind farm, or a carbon offset or something along those lines. So all these systems are very similar in their nature, and we set out to build industrial strength versions of that so they can have market trust, and so that our systems look very much like other types of major commodity markets, but they're very much focused on the energy transition and those attributional based aspects of those markets.
Excellent. Thank you. Now, another thing that I wanted to ask you, and I'm glad you mentioned it, Xpansiv Connect, which is your recent launch. I was wondering if you could tell us more about it and who could benefit from it.
Sure. So as I mentioned, we've built out what we believe is the market leading infrastructure, and the registries that we operate currently support more than 85% of all the carbon offsets issued in the world, and the majority of the renewable energy credits in the world, so the largest renewable energy credit registry in the world as well. And what Xpansiv Connect does is it really provides open access to that infrastructure, as well as post-trade settlement, kind of serves as a meta registry, providing portfolio management. And what we really wanted to do is open it up to all stakeholders, including end users, brokers, banks, exchanges, other service providers, and other platform providers, to help scale, back to our mission, to help scale the energy transition market. And the idea there is we'd spent years and years and millions of dollars building out the back-end infrastructure. And if we could support others getting on that would help accelerate the growth in these markets across the whole energy transition. So be it carbon markets or renewable markets. So we've opened it up to other exchanges. We've opened it up to data companies, ratings agencies. We on our announcement for Xpansiv Connect, there were 20 companies on that, and we expect to see several more come on in the near future.
And how did you come to the idea of Xpansiv Connect?
Yeah, so we started really having built it out to support our customers on our platform over the years. And one of the things that's really interesting about these attribute type markets, so if you use carbon offsets, for instance, a contract may support a particular type of standard, particular vintage, certain sustainable development goals, the UN Sustainable Development Goals. And in our platform, because we have electronic connections or APIs, we're able to ensure that people make or take delivery of exactly what they would want to transact in. And that really has helped us scale our markets. And that system became something that was being used not just in our exchange, but then it started to grow into supporting over-the-counter transactions as well. So we have about 1 billion units transferred across that on an annualized basis today, and that platform supporting these markets. And can I give you a sense of that? There are about 400 million carbon offsets that were transferred across our platform last year, which is many more than were actually retired in the marketplace. So as you can imagine, it supports the significant portion of the over-the-counter market. And what we realized is that if we could help others connect into that and become an on and off ramp or the physical delivery location for these markets, it would help accelerate the growth in that market. So there may be competition for price discovery in exchanges or brokerages or other vehicles like retail providers. But the back-end infrastructure could be the same. So we're trying to provide that back-end infrastructure to support the market growing and really reduce the costs and accelerate the ability to get the benefits of of capital being deployed into these markets. And one of the one of the other things too there is we also started working with countries. So we were selected by the Johannesburg Stock Exchange to support an effort in Africa to help build out the African markets. And it very much connects to that open infrastructure that we developed under Xpansiv Connect. And then recently we've announced that we are working with the Kingdom of Saudi Arabia in a program called the Regional Voluntary Carbon Market Company there. And that market is also connects through Xpansiv Connect. So that has access then to the large standards such as Vera, ACR, Climate Action Reserve, and so on. So really, to us, it was a journey as we started to open up our infrastructure to countries and had inbounds from our partners and in some cases competitors looking to work on that infrastructure, that we realized that we could help accelerate these markets. So went through a process, built out a significant amount of APIs, put process in place so it's able to be opened up to external parties, and announced that launch about a month ago.
Brilliant. John, since you mentioned Saudi Arabia and their RVCMC, I was wondering if you could perhaps get into a little bit more detail about that partnership and how it came to be.
Yes. So we're quite proud to be working with them. They went through a very competitive process, RFP, with a strong view to building a regionally specific market for the Kingdom of Saudi Arabia, but also have connections to the global markets, in particular Africa, but just broadly the global markets, because the carbon market in particular is very, very global in nature, where you have countries that are normally net long or net short, and they're very keen on building a very strong, fully integrated platform. So we had partnered with them. Well, first we answered the RFP, and then we've been working with them to launch that. And we're quite excited about the progress that they're all making there.
Excellent. Another question I wanted to ask you is a bit of a broader question, actually. As you certainly know, the VCM has faced its fair share of challenges lately, particularly with the transparency and credibility issues. Now there's also other issues gaining attention, such as lack of demand. What are your thoughts on these problems?
Yeah, there certainly was a challenging time, still is, coming out of it for the market. All the questions around the quality of the products and how they can be used. There's been a lot of work internationally on that starting to come out. So very recently, the ICVCM, or the Integrity Council on Voluntary Carbon Markets, came out with its core carbon principles. And those start to put together comfort after a very, very long process on quality in the voluntary carbon market. Similarly, there's been programs like the VCMI, which is the Voluntary Carbon Market Integrity Initiative, and the Science-Based Target Initiative, SBTI. So these are large initiatives coupled with government activities that are helping to define high quality products. So those efforts are starting to bring the market back together. Our role really in it is providing infrastructure. So we're not in the business of saying is an offset good or bad. We're in the business of saying it is what it says it is. That's not double counted, and then it can be transferred efficiently, things like that. But these efforts we've been very supportive of and have worked with, and we've seen them starting to come together and bring the market aligned. So we're very, very excited about those efforts. There's also a couple other demand-driven activities. So you have the net zero commitments, companies coming online. Many of them have check-ins in around 2025. Likewise, you have Corsia going forward with its program, going into the compliance phase, and Corsia being the airline program. And we're proud to work with IATA, the International Airline Transportation Association, having developed a program called ACE, which is a market for airlines to purchase offsets to support their compliance needs within the CORSIA program. So we see those as being major drivers in that. But the market had gone through a period where there was a need to look at the types of projects. There's been a lot of work. There's been a lot of improvement. So things like baselining. How do you get better at baselining? How do you use technology? So digital MRV. These are all things that we've been involved in supporting. But the market itself is just really maturing, and you're starting to see significant capital put in the market to develop out more rigorous measuring, things like that. So we fully see the market coming back. You're starting to already feel it with customers coming on board and trading starting to come back.
So how do you believe the market will behave in the coming year, maybe, and maybe the several years after that?
Yeah, so I'm incredibly bullish out the curve on the market because you have offsets are an important tool. They're not the only tool, but they're an important tool in in deploying capital into the market, into the global south. They're also provide a cost-effective way for companies to address emissions that they otherwise wouldn't be able to address. So with all these initiatives and better clarity coming out of these programs and others, some of the ones I mentioned, but then some others, coupled with the convergence of voluntary markets and compliance markets. So you have places where offsets are utilized to meet compliance purposes, particularly in Asia right now. I see a lot of movement in that effort. Those will drive demand. So I think the market's very much looking for that catalyst to really have it take off like it had done in 21 and 22. But I think the long-term view is incredibly strong. The question is the market take off in July? Is it take off in next quarter, the quarter after? I don't think there's any question about the market in the long term. It's really a question about demand coming together around the standards that have come out, or the efforts to clarify quality.
And as far as convergence between voluntary and compliance markets goes, do you see that happening anytime soon in Europe and the US?
Yeah, definitely. It'll happen in a little bit of a piecewise mechanism, right? So you have, for instance, Singapore coming forward with a program that enables offsets to come in, or Australia under the ACCUs. Those will help define what qualifies in those areas. And the U.S. government recently came out, the White House and a number of cabinet ministers supporting the offset markets. And as they start to put clarity in things like programs like entities like the Securities Emissions, the SEC, those efforts will come through, start to get more clarity in these markets. And then CBAM in Europe, those are all things that'll start to create clarity, but there'll be regional specific clarity. So it's one of the reasons that you'll need to see regional specific tools, but globally connected market infrastructure. And that kind of brings us back to why we were doing Xpansiv Connect in the first place, is really to help enable that. And so if someone's could look into across their portfolio and see, well, what will qualify in the program in, for instance, California, may not qualify in the program in Australia, but they can see their assets across that and transfer in those types of things. So we really see that it'll start to come together, but it is very unlikely to be one set of rules. It'll be a couple of different pieces that'll come together, and those become benchmark contracts. And that'll, again, enable capital to flow more easily in these markets.
What can you say about companies using market-based mechanisms that go beyond carbon credits for their net zero or energy transition programs?
Sure. They, well, first of all, most companies should start with doing everything they can within their own control, before they head to offsets or to other market-based tools. So you see these companies typically, do things around their own processes, and each kind of company has a different set of things that are within their control. So a tech company would have something very different than a manufacturing company. And then what we're starting to see is, of course, people utilizing offsets to take what they cannot control to meet their net zero commitments. But there were other tools emerging. So you see, renewable energy credits, which have been quite popular in the U.S. in the last couple of years, have grown quite a bit internationally. So those are renewables that are helping companies meet their commitments. So you can think like a data company in Indonesia that made a commitment to reduce its carbon emissions or to go entirely renewable. They would then purchase renewable energy credits on an international basis, things like IREX or Tigers. So we're seeing increased use in that, and that's growing very, very rapidly. It's actually probably the fastest growing part of the markets that we participate in right now. And then we also see fuels. So there's a lot of movement around low carbon fuels. So there are things like sustainable aviation fuel, but there's also low carbon airline fuels. You also see natural gas being differentiated. So something we worked quite a bit on. So you're tracking natural gas that will have things like low methane, or could have also things like certificates that indicate that it's been produced in a more responsible manner. For instance, it's not a well pad close to a school, or it has good encasements around it, things like that. So you're seeing a mix of these things develop really based on the company itself. So you would see a company that's perhaps using petroleum-based products looking to try to address it by purchasing cleaner versions of those fuels. Versus somebody who's maybe using more electricity would look more towards renewables, and so on. So there's a series of tools that are starting to be developed across the market that are meeting the needs of these different customers. And some of them are further along in the path, like renewables and carbon offsets, but some of them are coming online and have promise of being very, very large impact on reduction in carbon. Things like the fuels, so LCFS in the West, or SAF, things like that.
Since you mentioned fuels, just another question for this, like how quickly do you see this market developing? Do you see it growing faster than the VCM, for example?
I think the fuels market has potential to be as large or larger than what the VCM has the potential to be, and it can be a very, very large market. You think about all the fuels that are in the world, but there's various different tools on it. So for instance, electrification of transportation is one pathway. Another pathway could be biofuels. So each one of these things have different impediments to their growth, be it infrastructure deployment or technology development. So a lot of efforts around sustainable aviation fuels, and it has a lot of promise, but the quantity of sustainable aviation fuels, just the supply that's currently available, is not yet scaled. But as these markets develop and you get better price signals and technology improves as well, fully expect to see those types of markets grow rapidly. Likewise, there's a lot of efforts in things like green hydrogen that are being put forward. The U.S. In particular has invested quite a lot, as is Europe. Slightly different models. A bit more of a carrot-based model in the U.S. For these types of markets, but these are going to definitely drive very positive outcomes. And I think fuels has the potential to be one of the largest environmental commodity classes.
John, I have one last question before I let you go. I'm sure Xpansiv has plenty of exciting new developments and plans for the future drawn up. Are there any such plans that you could share with us right now?
I think you'll see, we're quite proud of what we have built from an integrated market solution set. And we're working very closely now with various countries as I mentioned, to create regional specific market interfaces, but keep it connected to the global marketplace. So I think you'd likely see us push further into some of these international efforts. You'll see us push a little bit further into things like fuels. As I was mentioning, we're quite bullish on that, but we remain, we operate the market infrastructure. Our exchange is over 90% of all carbon offsets that trade on exchange trade on our exchange, and our registry is over 85%. All the carbon offsets that were registered last year on infrastructure were on our infrastructure, and we see an opportunity for that market to grow very, very rapidly. So we're working with our partners to help scale it, and again, back to that Xpansiv Connect, really open it up to partners, competitors, and the like, so that we could all work together to help scale the global market. But we're quite excited about the future and the opportunity to push into geographic expansion around the world.
Excellent. I'm really glad to be ending the episode on such a bright and positive note. John, this was a lovely conversation. It was a real pleasure to have you as a guest on the podcast. Thank you so much for coming on.
Thank you for having me.
If you enjoyed this episode of the Carbonsations podcast and would like to hear more conversations like this, please be sure to subscribe. We really appreciate the support.